What's up guys, welcome on another video, and on this video we're going to be talking about mitigation candlestick, right? Mitigation candlestick, buy or sell remorse candlestick as many of you call him as well. And we're going to be talking about what is actually going on behind that concepts, right? And to really understand it, we need to be thinking about orders, right? A lot of orders in one really specific candlestick, right? And we have over here a chart, GBP USD 15-minute time frame. Really recently, this kind of stuff happened 7th of July if you want to go back and kind of like watch it. And you can see over here, right? We have market fail to create a new higher high. So we have a lower high formation. Now, we do have kind of like an equal highs over here, but just focus on the candlestick right now. You can see the market does have institutional candlestick right over here. Market came back down, coming back up to that institutional candlestick, touch it, and market is selling off. So we know that inside of this institutional candlestick, the blue one, right, there was a lot of sell orders delivered to the marketplace by smart money. Because what we are seeing right now is just the aftermath of those orders. So we were thinking like, okay, if the market is coming back up, and because we already broke quite a lot of lows, right, and we're kind of like expecting for market to create a run below those sell side liquidity, we would say that if the market is going to come back up into this environment, this could be a good sell opportunity for us because we know that orders are there. And also for smart money, particularly this candlestick, right now it's representing the profit because the market is down over here. They have an entries inside of this candlestick. So that's why I'm going to move this gray box into a green box, because this is going to represent the profit orders inside of the marketplace, right? Of course, this institutional candlestick is also the profit right now because this market is coming back down. But this particular is really interesting for us because this is where really strong sell-off happened. So we know that inside of the marketplace, smart money is buying and selling in the same time. What it means that they're hedging. And this is going to be a really good explanation and kind of like a graphical example how smart money is actually closing out orders that are in drawdown and how they are keeping winners run. Now, so we can see that market is now, let's say for example, breaking the structure. We were expecting if the market is coming back up to this institutional candlestick, we would put a sell limit right over here on the open and potentially like stop loss right over here or what over here. Doesn't even matter. What matter is, let's see what happens. Right? The market is literally going lower, kind of like trying to attempt to go for this low, and this is where magic happened. Market went past this candlestick and past those candlesticks over here as well. So they went past this institutional candlestick. For us, that would mean that the market hit our stop loss, but not for smart money, because smart money does not need to have a stop loss because they can hold drawdown for a lot of period of time because they have buy orders down over here that are representing profit for them, right? So let's talk a little bit about those orders right over here. We know that there were kind of like moving market lower, so that now we know that in this candlestick there is some short orders in. So let's say for example, every single low represent kind of like distribution of those orders, but still there could be like 2 to 3, maybe 10, maybe 20, we never know how many percentage of those orders that are still in the marketplace that are not closed out. Now those orders particularly are now not representing the profit anymore, but they are kind of like a burden to the market, not market but smart money. That's why I'm moving this box to the red one, right? Because we are in a drawdown, we encountered loss, and in exactly on the same candlestick, smart money is now in a drawdown, okay? Because they move market higher, they decide to be bullish for whatever reason. That's for another lesson, right? Let's focus now about this candlestick. So now we know that inside of this candlestick particular, we have orders that are in a drawdown. Now, what the market is doing when we have such a conditions, a lot of times the market is going to be having a retracement, right? So let the market do its thing. It's creating a new high, really beautiful expansion to the upside, right? And when the market is going to be deciding to start to come back down, you're going to see that really particular area they're coming back down to, right? Now let's stop a little bit around somewhere here, right? Let's talk about this environment. We see that inside of here, we have a beautiful expansion to the upside, right? We do have an institutional candlestick right over here. Market came back down, retested it, and another explosive move higher. Now they're coming back down, right? And inside of this range, you can see that they have some sort of bullishness kicking in, but they want something else. And we can see that something else means this imbalance, but not just this imbalance. Right across that imbalance, this candlestick over here is actually hidden. This institutional candlestick is what they're after, because those orders down over here are in drawdown. And look how beautiful that actually happens, right? So, and when they're coming back down, right, that exactly orders are going to be literally closed out in break-even scenario. They did spend a lot of times holding that drawdown, but like for smart money in particular, there we go, right? They came back into that environment, right, and they're already pushing price higher. So what is actually happening over here? They were coming back down to this environment because they want those orders out. They want those orders to be closed out because that was literally a burden for the smart money going higher. But they use that same orders as a new opportunity because they came back down, they captured a lot of liquidity below those lows, they fill this imbalance in, not entirely, but just small of it, and they came back down to this candlestick volume. We could be drawing just volume of the candlestick. There we go. And why they want to come back down to the volume of the candlestick is because they want those orders inside of that area to be closed down and break even. So now they don't have losses, but they have break even scenario, right? And that exactly the same concept is mitigation candlestick. That's the mitigation candlestick. The institutional candlestick that didn't work, right? So they're coming back down to close those orders out. And while they're closing those orders out, what they're doing? They're buying more orders. Exactly in the same area where they were selling, they're now buying. But they're buying over here. How do we know that? Well, you can see the market is pushing higher and higher and higher. And if I play this into the future, you're going to find out that there was a pretty healthy uptrend delivered after that, right? See? And this is the mitigation candlestick, and this is the concept behind it. It's because the orders inside of that candlestick were still active. That's why smart money is coming back down, because if we would be smart money, we wouldn't create a scenario in the market that we would have losses. It would be not logical if we are moving the marketplace. We want to win 100% of the time because we are controlling the marketplace. We want to go up, we want to go down, right? That's why we are controlling the marketplace, speaking hypothetically, right? And when the market is coming back down to those specific candlesticks, that's where they're closing orders out in break even instead of having a stop loss. And because they have so much money, they can hold a lot of orders in a drawdown for a long period of time. But eventually they're coming back down, they mitigate those orders out at break even, and at exactly the same time they're investing more money into whichever direction they want to go next, right? So I hope you now understand mitigation candlestick. If not, we're gonna see each other on the sessions and we can explain even more there. But this is for now all. See you guys in the next video.